Hey everyone, James O'Reilly here from Northeast Wealth. Congratulations on the recent transition from Cogent across to Cash App. This video is designed to give you a little bit of context on one of the key things you're going to need to think about as a result of this transition, and it relates to your personal insurances. Now, for those of you that might be aware, by moving across to Cash App, which is owned by Block, you qualify under the Block Personal Insurance Plan, or you, as far as I'm aware, you certainly should qualify. And that is an insurance plan that's underwritten by a group called MetLife, and it's actually quite a good insurance plan. But there's quite a few things that you need to do, and I dare say some things that you need to understand. So let's dive straight in, and I'll seek to give you as much value as I possibly can in this video. Now, the very first thing I'm going to do here, let's cue that Sean Bean meme. One does not simply deliver a financial advisory presentation without having a general advice disclaimer. I hope that all this information is applicable for you. This information is after having gleaned through the PDSs and the fact sheets for the Block plan, which I know reasonably well from other clients. However, there is no substitute for contacting Mercer and saying, is this applicable to me? Can I confirm that I've got this cover? My limited view is that you do, but better to be safe than sorry. So let's jump into the big things we want to talk about here. There are 6 discussion points, and I'm going to go through each one of these as objectively as I can. Let's get started with the first, which is group insurance. The offer that's come through and it's been automatically given to you via this Block group insurance plan is called group insurance. And the concept of it is that, firstly, the premiums are paid by the employer, which is a massive, massive, massive pro. Now, a second pro, which is really, really significant, is that there's no underwriting. And for those of you that have gone through the process of seeking to apply for insurance or increase insurance, you might have had what is a pretty awful experience of needing to provide all of your medical history, depending on your levels of cover and what you provided in that information. There's a very reasonable chance that insurers might have said, yep, we need to write away the doctors and physios and other professionals in order to get a total view of your health. And then at that point, we'll determine whether or not we can offer you cover. And then even then, if they do offer you cover, they can offer it to you on pretty crappy terms. They can exclude certain issues that you've had in the past, or they can make the policy more expensive to cater for their perception of you being a higher risk. So you actually skip all of that with group insurance. It's just very simply that if you're employed and you're working more than 15 hours a week, we'll go through the conditions shortly, then you actually should qualify straight away and you've got cover and there's no underwriting. Another big pro here is that this cover is portable. This is a conversation or an area that often gets a lot of confusion. And by portable, what I mean is that if you finish up with Cash App and you go to a new employer, you can take that cover with you. But I note that you've got a finite time to act or it will disappear, so we'll cover that shortly. There are some cons to group insurance too. The first one is that the definitions are typically inferior to if you went and got a full bells and whistles cover through a financial advisor, or if you went and did it yourself. I emphasize there are some substandard definitions, and I say some because for the most part, it's actually a really good policy. And I think, especially as a function of the fact that it's free and there's no underwriting, it becomes a brilliant policy. So I think that it's, I think those substandard definitions it's a bad thing, but it's not necessarily all that bad contextually. You have very limited customization around the levels of cover that you have. We'll talk about that shortly, but you don't have the freedom to, in a lot of cases, to increase your insurances the way that you would want, and without at least having to complete medical information and so on. If you're leaving your employer, I talked about it being portable. Unfortunately, one of the crappy things is that, yes, it's portable when you do leave your employer. More often than not, it's very expensive. And not your problem right now because you're an employee where it's being paid, but something to consider in the future. And the last thing is that the group insurance is tendered out to a lot of different insurers. So what happens in Block scenario is they approach a number of different insurers, like your MetLife and your Swiss Re's and your Hanovers, and these are massive institutional insurers, and they say, we've got a book of humans that we want to insure, and here is the profile of them, and there's say 4,000 or 5,000 of them, for instance, and here are their ages and here are their occupations, and so how much would you price to give them life insurance and total and permanent disability and so on. And they just compare, and someone is the best as a function of money and terms, and they say, yeah, we'll go with you. And so right now, Block are with, I just call MetLife. However, in the future, they might tender that again, and Hanover or Swiss Re and other providers will be better. And in that scenario, when they move, the terms will actually change. So what you're eligible for now can actually shift in the future. Important to just be aware of that if there is a change that comes through. What are you covered for? Well, in the simplest terms, you're covered for life cover or death cover, total and permanent disability, and as a reminder, this is where you're not only unable to work, you're totally disabled, but you're permanently disabled, i.e. in a medical or in a doctor or medical professional's view, you're unlikely to ever return to a role that you're reasonably trained or suited or qualified. That's total and permanent disability cover. And also income protection, or it's actually referred to in this contract as group salary continuance cover, which is just income protection. Now, a really important thing here around what you're covered for, this is a massive mistake that I see so many people make in your situation, is that we don't read the PDS. That's quite normal. Humans don't read PDSs, but then you miss out that there are some other benefits here, some pretty cool ones. So I want to just take a moment to dial into these because it's worth you being aware of. You will be paid for 3 times your income protection monthly insured benefit if you suffer from one of these really, really average things to happen, right there. Now, you don't need to wait. There's no waiting period. It's just a case that if you suffer from one of these in line with their definition, let's imagine for simplicity, your monthly benefit through your income protection is $10,000 a month. You send the claim form in, there's the $30,000 check coming straight back. So please be aware of what's here. Now, the left-hand side stuff is valuable, but in my humble opinion, like the right-hand stuff is even more valuable. And I say that because there's a higher frequency of these things happening. Now, the stuff up here, these paraplegia, quadriplegia, I categorize that as low frequency. But these fractures here, broken arms, broken legs, broken forearms, collarbones, these sorts of things, these are lump sum payments. Similarly, if you've broken your arm, as it says, between your elbow and your shoulder, or your forearm, they're both 2-month benefits. If you break your arm in its entirety, as I think about it, any part of it, and your benefit is $10,000 a month for income protection, there is a $20,000 check that is waiting for you if you can just provide the x-rays and submit the claim to the insurer. So please be across this because it's so easy to break your arm and go, oh, that sucks, and just forget about it. Please don't do that. This is a real thing. It's a real benefit for you. Please use it. When it does cover start and end? Well, it starts now, as in you're an employee now of Block, or Cash App, Block by extension. But there's a couple of little asterisks here. The first one is assuming it's been offered to you. My limited understanding is that it's been offered to all Cash App employees. But that's up for you to confirm, please. The second is that you're working at some Block for more than 15 hours a week. Now, curiously, the life and total and permanent disability contract actually stipulates that it's an average of 15 hours a week. So if you do 10, 15, 15, 20, you should be okay there. Whereas the income protection contract doesn't stipulate an average. It's very clear that you have to work more than 15 hours a week. Hopefully that doesn't have any implications for any of you, but if you are on the cusp there, it might be worth dialing into. For life and total and permanent disability cover, you must be either an Australian resident or a 457 visa holder in order to be eligible to make a claim. Now, the cover ends at either 60 days after leaving Block without taking the continuation option. So if you guys were to leave Cash App and pursue another opportunity or do whatever you'd like to do, in that scenario, you need to notify Mercer, who is the holder of this insurance. You need to notify them within 60 days that you wish to take that cover with you. And if you do that within 60 days, you will be able to do that. They'll then send you some quotes. As I said, it's very expensive, but you might decide that it's better than nothing or it's the right play to keep. And then from there, you can start paying those premiums personally. Now, I do note that this is actually quite strict. One thing that sucks about this is that if you, with the life and the total and permanent disability, when you leave, you've got 60 days to notify them. But then once the policy goes, they allow the continuation option. They say, yep, you've still got the cover. You're going to pay it personally. You now must be employed within, I believe, 60 days. And if you're not, then the cover will lapse. So if you intended to take a sabbatical, for instance, or maybe it's just hard to find a role that you want, and so you've left and you're waiting patiently for the right role, if you go over that 4-month period, we could run into some headaches here. So again, the devil's in the detail when you're looking to undertake a continuation option. Number 2 is when you turn 65, all cover turns off at that point. Your death, naturally, in the event of death, then hopefully the life cover, the death cover will pay out, but nothing else would be available. And then lastly, the cessation of residence, or alternatively, you not having that 457 visa or being ineligible to work in Australia. What is typically covered? Well, there's 3 things here. We've got life cover, total and permanent disability cover, and income protection. For life cover, you're going to get 3 times your base salary up to a maximum of 1.25 million. So that means if your base salary is $200,000 a year, then you are automatically entitled to $600,000 of cover. Now, if you're, what's 1.25, 416,000, if you earn over $416,000 a year, if you earn 500, for instance, 3 times your base salary is 1.5 mil, but the limit is 1.25. So therefore, you're only eligible for 1.25 as an immediate amount. The same thing for total and permanent disability cover. Income protection, it is 75% of your pre-disability income. So we use some simple numbers here. If you're earning $200,000 a year, your 75% of that is 150,000. So 75% would be $150,000 a year. That's what you're entitled to if your income is 200K. And that's payable after 30 days of being unable to work due to illness or injury. Now, I note that this doesn't stipulate what type of illness or what type of injury it is. That's actually not important with income protection. It's just having a medical practitioner support that you are unable to work in your current role right now and you'll need to take more time off. Now, that's 75% salary. It's paid monthly and will continue to get paid until you either return to work or turn age 65. Now, the last little thing I'm going to add with the income protection is that it is offsets in most cases by your other income. So if you have 6 months of sick leave, for instance, you will not be able to claim on your income protection until typically you've exhausted your sick leave. That doesn't typically apply to annual or long service, but specifically to sick. So important to be aware of that. Now, that said, this is what's typically covered. The next section here is around what we call automatic acceptance limits, or AAL. And that is that these figures here, the 1.25 mil and the 14,000 a month, these are your automatic acceptance limits, which means that this is the maximum they will give you automatically without needing to do any more work. In that scenario where you are earning 500K, if there are a few of you in that category, then I note that you're actually eligible to increase this up to your 3 times, which will be 1.5 million. And I note that that increase should still be paid by your employer, but it's not automatically given to you. You would need to go through underwriting. You'll need to apply to have your cover increased from 1.25 up to 1.5, and that extra 250, you'll need to do the full medical underwriting in order to get that approved. And that's the insurer's way of just avoiding having scenarios where they have huge policies for individuals. Now, this is more pertinent in my eyes for the income protection because as a salary function, 14,000 a month means that this drops out at like 220K. Obviously, there's going to be more people earning over 220 than there are going to be earning over 500. So in the scenario that your salary is over 220,000, well, you've now hit your 14, I think it's 224 or thereabouts. You've now hit your maximum 14,000 a month ceiling. So if your salary is 250 and you would like to increase it up to 75% of that 250, you will need to apply for that last little bit. Otherwise, you'll only be eligible for $14,000 a month, which is in line with about a $224,000 wage. So please do be aware of those numbers. If your income's above 416,000, you're going to be hurt or hit on the life and TPD side. And if your income's above 224,000, you're going to be hit on the income protection side to the point where you'll need to manually increase your level of cover. Let's move on. What do you need to do? So there are a few key things that and action points that I would really encourage that you consider as a result of getting this cover. The first one is to apply for any cover above automatic acceptance levels where it's appropriate. So if you are fortunate enough to have an income over A, 416K or B, 224K, you need to, or I would suggest that you get in touch with Mercer, who's the plan operator, and say, hey, I'm thinking about increasing my cover levels in line with my salary. That's a process that they can walk you through. Secondly, confirm if your new cover levels are enough. This is not such a simple process. It's certainly one that we can help with should you wish to reach out to us. But my personal experience is that 3 times salary is not enough cover in most cases. It's circumstantial, of course, but when we consider for a lot of people that we might have costs such as clearing home loan debt, having enough funds to support surviving partners, funding kids' educations, and so on, my experience is that these numbers, especially the lump sum covers like your life and your total and permanent disability cover, those cover levels can be very high and a much higher multiple than 3. So if there is a shortfall, then we need to address, well, how much do we need to increase this by? So therefore, once you've confirmed if your new cover levels are enough for you, there's a fair few calculators online. We can also support you with this one as you wish. you would want to either increase your existing cover or decrease. You might have already taken out some really comprehensive insurance with a financial advisor or an insurance broker. Well, if you have done that and that's been done thoroughly, you now need less. And there's no need continuing to pay those premiums because you've got this really high quality and free contract that exists with through Block. So why pay for premium for insurance that you don't need? So if you're overinsured, you really should be dialing that number down to the correct level. And if you're underinsured, you should be seeking to address that by potentially taking out more cover, either through Block or alternatively, through a direct channel. I really want to emphasize this point here, which is that 2 income protection policies will not pay you a 2 times benefit. And with life insurance, if you have $1 million over here and then you get an extra $1 million and unfortunately it'll pass away, in most cases, both policies will pay. But with with income protection, I beg your pardon, your limit is 75%. And so if you have a 75% contract over here and a 75% contract over here, and then you go on claim, these 2 insurers will fight to defend themselves against being the one that shouldn't pay you. And it's a very frustrating experience to go through because you've been paying double premiums the whole time, and then they end up at best halving what they actually pay you, and they don't refund any of your premiums either. So there's absolutely no value. Even if you think about in your super fund, you might have income protection contracts. If you're intending to stay at cashback for a long time, cash out, I dare say there's probably some value in considering removing that income protection just to not have the costs inside your super fund. It's an area that's very fertile for advice, so feel free to get in touch, but unnecessary costs are unnecessary costs. And then the last thing here, don't forget about the cover if changing employers. As it says, the 60 days available to act. You need to do this quickly. In my own experience having clients that leave with these type of plans, there's lots of things going on. They leave one employer, they go straight into another employer, works crazy, I'm straight into the thick of it. It's very, very hard to pull your head out of that change and also manage your insurances too. So please get on the front foot. If you know that you're going to be finishing up, try to get on, reach out to them in anticipation of that, notify that you want to execute the continuation option. And again, if you need support, then reach out. Lastly, you might conclude that all of this is in the too hard baskets. It could either just be not your game, something you totally hate, or you just want to outsource it. If that's the case, we're 100% here for you. We're very happy to support not just your insurances, but any other area of advice that you do need, obviously providing we can help you with it. This is the first video that I'll be putting out. I'll be releasing another video very shortly that relates to employee share schemes relating to Cogent, or that Cogent transition. I'm just waiting patiently for a little bit more information before getting that done. But hopefully this has been really valuable for you and it gives you a nice clean synopsis of what's available. Reach out if you need, and congratulations again on making a huge and hopefully very exciting leap. Thanks everyone.